managing insurability. Thinking about insurance companies and thinking about them as kind of a cash machine, the mindset has to change because every claim that you make is recorded and is factored into pricing, rating tiers. So you don't have any activity, but let's say you have one accident, you're up to a higher rating tier. And then what's really significant, if there are multiple losses, then all of a sudden the compounding increases exponentially. So that's where somebody can all of a sudden see their rates increase 150 to 200% because insurance companies contracted, with the state approved, they can surcharge for activity. And it's not the severity of these losses, it is the frequency. So even if you had two small losses, that's going to cost more than one big loss. Okay. So all of these things are factor in. Rates are typically significantly impacted when you look back 3 years, but every insurance company will look back 5 years and factor that in. Some are looking back beyond that for major violations, your DUIs, your reckless driving, all of those types of things. The insurance companies know what's going on. The insurance score is part of the claim activity. It's also part of consumer reports or your credit score, motor vehicle reports, tickets, accidents, all of this stuff is a rating factor. And so those are things that people do need to be aware of. And that can certainly impact what you're paying for insurance. So if you say, well, my neighbor is only paying set dollar amount for X, Y, and Z, it's like, well, their profile is completely different than yours. And so those are things that everyone is individualized and rated on all these areas. Ideas, again, kind of big picture. You self-insure for the small things. That's the deductibles. That's having a conversation with that trusted agent or resource. Hey, I got into this. I hit the basketball pole and there's a scrape on my bumper. Am I going to make a claim or not? Here's the pluses. Here are the minuses of doing that. And then again, the small things we try to self-insure for a little bit, but then you make sure you got the right coverage for the big stuff. Is the house insured correctly? Do you have the right umbrella coverage to cover your assets, your future earnings, your net worth, all those types of things? That's where that mind shift does need to shift a little bit to make things more comprehensive, but also more efficient because these premiums, we are hoping there is that light at the end of the tunnel where they're going to start to plateau a little bit and possibly recede. Mother Nature and the economic world definitely has a say in that. But we do see with a lot of these changes that there is light at the end of the tunnel there for folks where once we exit this correction moment that things will look a little better.